Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Good Friday, the 7th of April. All right, now let's have a look at what's going on. The markets have really come back to where they were sort of a few days ago, right? Sort of a bit mid-range, and it's to be expected because we do have the almighty non-farm payrolls data due, right? So just as a pre-cap, you always want to come back and see where the market is and what happened, right? And the major data out sort of yesterday, for my liking, was the Canadian employment numbers. Okay, pretty close to expectations across the board, right? And you didn't really see anything significant there. Oil still dominating proceedings with regards dollar CAD. All right, now let's just have a look at the major currency pairs. What I'm talking about is we've had a little bit of a clean out to the top side, to the downside, and we're back trading mid-range. And this is the same sort of setup across the board. Aussie and Kiwi coming back under pressure, sort of joining up with Euro and Sterling. The dollar index, okay, broke down. There's a little bit. So we've been getting exceptionally weak data, right? And this is what you've got to factor in because we have got the non-farm payrolls. It's got bigger punch, so it may have a bigger impact. Now, the dollar was heading lower on all the weak data. Then all of a sudden, Treasury yields started moving because, okay, the recession fears popped up. So today's non-farm payrolls data has a little bit of a twist to it. And I would be watching the US equity market very closely for direction, right? Because it's not just a straight weak US non-farm payrolls, you sell dollars, right? There's a bit more to it. It's getting tangled up in the whole treasury yields. So you need to watch what's going on. And the dollar pairs, well, dollar Swiss, to me, still heading lower, but we have to wait for this data. And that's what the market's waiting for. That's why it hasn't gone anywhere. And also dollar yen back in mid-range. And you can see dollar CAD just drifting sideways. Oil's looks like it's found a bit of a home around $80. So that's where we are. So everything is on hold, right? We're waiting for the non-farm payrolls. And if I just come back to the main screen here, let me just get that up. All right, so this is what we're looking for, right? This is News Squawk. So the key numbers here, obviously the unemployment rate, right? Expected at 3.6. Now it's been at like 20 or 30-year lows for some time. This has got to start blowing out. All the data's weak. So you got to, I mean, I'm expecting at some stage it's going to come out at 3.7, 3.8. The key part here is identifying the range of the data. Okay, 3.5 to 3.7. That's very important. If it's outside that range, you get a bigger significant move. Now, the second piece of data that you want to be focusing on, obviously the US non-farm payrolls, hence the name, expected 239,000. Once again, the range here, 150 to 342. And they're basically the numbers you want to be watching. Now, over the last couple of years, they have brought in average earnings, but that's sort of gone a little bit sort of dormant. So don't worry about that so much. These are the two numbers that you'll be trading. Okay, so what I'm talking about before around trading these numbers is connecting the dots. Okay, so when we are looking, so the US non-farm payrolls data, it's going to obviously populate the screens. The market goes a little bit wild. Now, also factor in extra volatility and an extra widening of the price just before the release. So this is due to the Good Friday, right? You might see less liquidity in the market. Now, what happens with the non-farm payrolls? Okay, if you get the data here, okay, you've got your expectations. You want to be watching what happens on the equities, not really the equity futures, but up here, the US equities, okay? Because the risk on, risk off profile has been coming into play as all this US data comes in weak. Well, my biggest concern with the release of the data is we get weak non-farm payrolls, which matches up with all the weak retail sales, factory orders, durable goods, manufacturing numbers. Everything's coming in weak. So you've got to expect this to be weak. But we are starting to see the treasury yields come into play. So as I said, it's not straightforward. Watch the equity markets, and then you'll get the direction, the risk on profile. Okay, risk on, equity markets are rallying. That would happen on weaker numbers, right? Weaker numbers means the Fed aren't going to raise interest rates, equities rally, and what you see on the downside here, Euro, Sterling, Aussie, Kiwi rally, and the dollar falls, okay? And vice versa for strong numbers. So that's the way I'm going to be looking at it. And you know what? You've got to give up a few pips here, right? Because when the data is released, the non-farm payrolls data is released, yeah, sure, there's going to be a bit of delay in seeing what the equities do. Right? So don't worry about that, right? The best trading opportunity is when you know exactly what's happening. So if there's a big variance in the number, You might miss the first 30 points. Who cares? Okay. If it's going to be a significant move, then you want to wait, make sure you get the right direction. Jumping in a little bit early can be a little bit haphazard. So then just isolate the best pairs. Funnily enough, like Euro, the one with the most liquidity, has got good trading opportunities both sides of the market. But once again, you want to have a look at what's going on. Otherwise, you could be walking into like a short-term trap. Okay, you walk into a trading situation and you get short, say strong US numbers. Okay, you start to see Euro break down, but overall, Euro's going up, right? So our best trading opportunity, if you want to isolate the best one, is potentially weaker US numbers, and you see it move to the top side. But once again, it's not just that simple, because all the US numbers are weak and the market is starting to factor in significant changes to the yields, right? The treasury yields. So just keep an eye on and connect the dots, okay? Equity markets onto the major pairs. Now, safe haven trades, if we start to see some significantly weak numbers, I think you're going to start to see gold, okay, continue to rally. And that means Bitcoin and the cryptos will probably rally as well. They are playing a nice safe haven trade at the moment. Now, also for those equity traders, whatever happens on the US equities, you can expect to happen on the global equity markets, on the futures anyway. It's Good Friday, low liquidity. So take that in mind. There's a lot of variables. Understand the data itself and don't overcapitalize the trading opportunity, right? These are the key numbers you want to be looking for, the range, and obviously the expectations, and non-farm payrolls and the unemployment rate. All right, guys, good luck. I can't really sort of give you too much more ahead of the release, but just understand this is what was happening yesterday. So it's best to follow the general pattern of what is impacting the US dollar and what isn't. Okay. Good luck. Have a great Easter, and we'll catch you later on. Cheerio.